right, it's time for me to bring in Dhirendra Kumar, the CEO of Value Research and our in-house mutual fund expert. Dhirendra, thank you so much for joining us on Investor's Guide. Dhirendra, we are in a very interesting investment environment. Now, in the past, we've seen whenever equity or the stock markets are doing badly, gold and debt tend to give inversely good returns. Now it seems as if all of these asset classes are doing badly. We see our equity market is going through a lot of volatility. Gold prices have gone down. The rupee seems to be, in a downward spiral altogether. And to top all of that off, our fixed income funds are also doing badly. Now, each of these things have, are being caused by different reasons. But can you tell us, in a nutshell, what's going on and how we should be approaching this market?
Yeah, I think, it is a crisis, and, it is a sheer coincidence that a lot of things happening which turns out to be affecting the pattern or impacting the pattern. Normally equity goes down, fixed income does well, interest rates are high. Right now we are seeing some, sheer coincidence that because our central bank is combating the currency or trying to, lift up the currency, so there has been a squeeze on liquidity. Squeeze on liquidity has completely changed the dynamic for fixed income in the short run. Government is saying that, is of the view, or the central bank is of the view that all these measures are temporary. I don't know how long this temporary phase will continue, whether it has to wait for the government or we will get lucky with some kind of, global impact, because there are a lot of factors at play. Markets are connected. Very difficult to anticipate what will cause that change. But I don't think the number of moving parts and all of them turning negative for our economy or our markets will last very long.
Well, Dhirendra, I'm going to ask you a question that a lot of investors are thinking at this point. Now, the only thing that seems to make sense is for me to pull all of my money out and take it to a bank and put it in a fixed deposit and lock in the current high interest rate that we have. Now, what would you say to an investor who's considering this at this point, pulling money out of his mutual fund, pulling money out of his gold ETFs, pulling money out of maybe his fixed income investments that have, been moving in the wrong direction over the last couple of weeks, and just putting everything in a fixed deposit at 8.5% or 9% and locking that money away? What argument do you have against that move?
No, one is that, you will be able to escape all the volatility. You will be able to escape all the anxiety which you quote when you get into a fixed income or equity today. But I think, the volatility of fixed income is a reasonably temporary phase. You still have fixed income avenues, investment avenues, which is not volatile and will deliver you, superior return than a deposit. And if you don't need your money over the next 5 years, or if you are likely to need your money after 10 years, 15 years, why do investors be worried about tomorrow? I think, it's extremely important for your long-term wealth accumulation or long-term accumulation to be into equity, because you are able to buy cheap. Yes, you have to be selective. You will need to be disciplined. You will have to overcome your anxiety. But if you don't need, think in terms of, utility. When do you need the money? And are you really worse off? Or maybe, it's time to review your portfolio. Keep away from lousy funds. Keep away from not performing. Get focused, but get organized. But I don't think, moving in mass to fixed income and more so in deposits, you will be a long-term winner.